Hi there, welcome to Kneppy Invest. Today I'll be discussing two companies whose share price have been running quite hot. One company for about 2 months and the other company since July 2020. And I'll be discussing if these companies are a buy for me and my investing strategy. Straight away, I'm going to say no, they're not a buy for me. But the whole point of me doing these videos is to share ideas because I do understand that not everyone has my sort of investing strategy. And even though these companies may not be a buy for me, the whole hope is I do these videos, give someone some inspiration to do more research on one or both of these companies. And when they do the research, they discover this company is a buy for them. They like what they're doing. They think they have a bright future. So that's why I'm discussing these two companies, even though I'm not that interested in either of them. So let's get stuck into it. So the two companies I'll be discussing are Oneview and AnteoTech. I've already done a video on Oneview because they did have a day back in, I think it was January, where the share price went up over 100% in one day. And I said that could have been a breakout, and it sure was a breakout. And the other company, AnteoTech, has, well, I'd say it was a market darling in the small cap sector about 8 years ago. We did see the share price run up quite strongly. They did an acquisition. That acquisition failed. They sold out of that acquisition, and now they're running hot again because of COVID-19. So both these companies, I'll look at their chart and look at the catalysts that caused the re-rating in the share price. And then I'll go through the financials, paying particular attention to the cash flow of both companies. Firstly, we'll start off with Oneview. This is a digital healthcare company, and the share price has gone up 792% in 2 months. So if you've been a shareholder and have held on through the duration of this period, you're really liking this company right now. And the market cap is 153 million, so a fair bit of a re-rate when you consider before the share price run up, the market cap was about 20 million or even less than that. So what was the catalyst behind the re-rating of Oneview's share price? So it all began on the 1st of February. They released an announcement to the market in regards to an agreement with Samsung SDS America to offer SaaS digital care solutions in North America. The market loved that announcement, and the share price went up 121%. Even in subsequent days, the share price kept going up and almost got to 15 cents. But then we did see the share price just weaken a little bit over the next 1 month, up until the second catalyst, which was released on the 12th of March right here. And this announcement was in regards to Stock's Digital Investor Awareness Agreement and Placement. And the market loved this announcement 100% on the day. But what happened in subsequent days was even more impressive. In fact, the share price went from about 16 cents all the way up to 40 cents in about 6 or 7 trading days. So this was definitely a bit of a market darling during that period. I did have a read of this announcement, and I'm still unsure why the market has loved it. So if you are a shareholder of Oneview and you understand why the market took a fancy to this announcement, make sure you leave a comment. On to Oneview's cash flow statement from the half-year report that was released on the 25th of February. When I read this, there are lots and lots of red flags that is making me steer clear of this company. Someone could argue with me that I'm just looking at the past, while these announcements are about the future of the company. And then I would probably argue, well, we don't know how these announcements or agreements are going to play out. We don't know the financial details of them. We don't know if this is going to be beneficial to Oneview in the long run. So what are the red flags when it comes to the cash flow statement? The first one is receipts from customers. It's gone backwards in the last year from 10.8 million euros to 7.3 million euros. So they do report in euros, by the way. So that's a major red flag just because it's going backwards. And in the next slide, I'll look at the history in the cash receipts. Now, the second red flag is the amount of costs this company has. And this has, I've seen this before with Oneview. And this is the major reason I have stayed well away from this company. They love to spend money. So in the previous year, 2019, they spent 24 million euros in costs. This year, they've brought it down and only back to 15.9 million euros. But what does that mean? Because that's well higher than receipts. That means they are burning through lots of cash. And this is red flag number 3. Operational cash flow negative in 2019 by 13.2 million euros in one half. This is only one half. And this year, negative 7.7 million euros negative. So they are burning through lots of cash. And because they're burning through lots of cash, they keep having to do capital raising. So $15.9 million of capital raisings in 2019 when the market cap was fairly low. So that would have been highly dilutive to shareholders at that point. And in this half year, they still had to do $4 million of capital raisings. So that means they just have to keep doing capital raisings until they either decrease those costs or those receipts from customers start catching up. So that's the thing with this company. I don't know what's going to happen. I'm not sure if these agreements they've made in the last 2 months or so will help out with their financial situation. When I look at the cash receipts history for Oneview, it doesn't fill me with lots of, hope, lots of interest, that sort of thing, because we're not seeing significant growth with the cash receipts. So what I want to see when I look at this sort of graph is an upwards trend, and we're not really seeing that. In fact, you can't even do annual growth rate of cash receipts because it's going to be quite low, if anything at all. It's quite lumpy as well, and the 2 highest cash receipts quarters were back in January 2019, April 2019, and they haven't reached those heights yet. So I want to see some sort of growth with the cash receipts. So the market right now is anticipating these cash receipts are going to increase quite substantially over the next few years. And a lot of times they're making a lot of assumptions. And when you make assumptions, you can be severely wrong, and potentially the market is doing that. So I like the risk reward plays, and there's a lot of risk with this company and maybe not a lot of reward. So I prefer low risk, high reward sort of plays. In my opinion, and you might disagree with me, this is a high risk and sort of a middle low reward sort of play. Now on to AnteoTech, and even though I'm not a buyer of this company, I have to admit the increase in share price for AnteoTech has been significantly, amazingly impressive over the past year. In fact, the share price has increased 1,746% over that period, and the market cap now is 459 million. And that should be a sort of a dead giveaway why I'm not interested in this company at this point in time. Now, really, the re-rating in the share price began in July. So 16th of July, they released an announcement in regards to developing some sort of rapid detection of COVID-19. And the market loved that because we're in the depths of COVID-19 pandemic, and anything related to COVID-19, the market was going to love. So the share price increased 63%. But it wasn't what happened on that day. This was the catalyst behind the re-rating of the share price. You can see the chart here. After that day, the share price just kept on rising up all the way from about just lower than 5 cents, about 4 cents, and all the way up to towards 15 cents based off this one announcement. But the second catalyst, just like Oneview, we did have 2 catalysts, and Anteo's second catalyst happened on the 3rd of February, and this was the customer, Loom, had secured a US contract with the Department of Defense to supply, if I remember correctly, to supply at-home testing of COVID-19. And again, the market loved this, and the share price increased 85%. And then just like Oneview, just after they released their second catalyst, the share price just exploded after that. In fact, the share price went all the way up to about 33 cents. Did come down again and tested the share price that we saw on the Catalyst 2 day in between 15 and 20 cents, but has bounced again upwards to 25 cents. So very impressive chart when I look at this. But again, market cap of 459 million, and I'll show you why I'm not interested in this company right now. I do believe there is a time and price to buy all companies. In AnteoTech's time was well over a year ago when the share price was something like 1 cent. And that would have been a great time to buy if you believed in the future of this company. And you would have seen your holding in this company significantly increase in value. So again, this is the cash flow statement from the half yearly released on the 26th of February. And again, there are some red flags when I look at this. Not as many red flags as Oneview, but the first one is receipts from customers, only 563,000 in the past half year. Has increased from the previous year quite substantially from 70,000 to 563,000. But still, that's not a lot of receipts for a company that has a market cap of 459 million. The second red flag is, this is going to sound a fairly funny red flag. They have a market cap of 459 million, but they're not raising capital. If I was management and they don't have a lot of cash, only about $6 million of cash on hand, if my company had a market cap of 459 million and I wasn't getting a lot of money, not a lot of cash receipts, I will be raising capital. Now, maybe the reason they are not raising capital is they do have 1.6 billion shares on issue, and maybe they don't want to increase those amount of shares on issue, but they could do a consolidation of their shares and then raise some capitals. But I think they should take advantage of the fact that the share price is significantly higher than it was a year ago. Just take advantage of that. You see companies doing this all the time, and I think that's one thing they could look at, increase the amount of cash on hand, and just in case things go bad in the future. To AnteoTech's cash receipts history, a very interesting history they have here. Now, I actually have followed this company for well over 8 years or so. So the cash receipts history here starts July 2013. And I was following this company before this, so I do have an understanding of what happened here. So the cash receipts history before April 2016 was quite low. It wasn't a lot of cash. They did have some peaks, but they did make an acquisition, and you can see April 2016, cash receipts went all the way up to over $7 million in that quarter. So that's in one quarter. Then they started dropping, so this acquisition was not working. They held on to this acquisition for almost 2 years and they decided to sell out. And I believe it had something to do with the debt they had to fund this acquisition or something like that. If you do know, just leave a comment in the comment section. And so they got out of that acquisition, and then the cash receipts dropped to almost zero. So you can't really see what's been happening since then. So the next slide, I'll show you that. And here we go. So this is the cash receipts history since January 2018. So not a lot of cash. So you're talking about $50,000 or so for about 2.5 years. And we have started to see the cash receipts starting to increase. But only $250,000 in the last quarter. That's not a lot for a company that has a market cap of $459 million. And the last thing I want to show you with the AnteoTech is the last 10 years since I've really been following them also. And we did see when they did become a bit of a market darling back towards the end of 2013 into 2014. The share price went from 5 cents all the way up to 25 cents. At that point, their market cap was around 200 to 250 million. And then the share price just dropped and dropped and dropped and dropped. For about 5 years, the share price just dropped all the way to, I think the low might have been just above 1 cent or so. And that would have been the perfect time to buy if you believed in this company. And then the share price just re-rated over the past 7 to 9 months or so. You can see by that chart there. So a share price, even though the share price is a very similar level to back in 2013-14 in the mid-20s or so, 20 cents or so, the market cap is significantly higher now than it was back then, simply because the amount of capital raisings they have done, and the shares on issue have doubled from 800 million to 1.6 billion. And that might continue in the future, because I do believe they should do a capital raising right now to take advantage of the high valuation of the company. You actually would see Elon Musk has done that a few times as the Tesla share price has run up. Even though he might say we're not going to do any capital raisings, he will see the share price run up and he'll think this is a perfect time to do the capital raising to take advantage of the overvaluation of the company. And that's exactly what I think AnteoTech should do, unless they believe they're going to be operational cash flow positive by quite a high rate in the next few quarters. And they don't need the cash. So I hope you enjoyed this video on these two hot stocks. Are they a buy for you or not? Well, for me, they're not a buy just because of their valuations. I think for me, they have to prove they're worth these high market cap numbers. So leave a comment if you disagree with me. The whole point of doing these videos is to share ideas. And if you can persuade me that these two companies are worth a buy, I would love to read that. So anyway, I'm not a financial advisor. So again, even though I'm saying these are not a buy for me, that doesn't mean that they can't be a buy for you. Do your own research, make your own decisions. So I'm not a financial advisor. And if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. Have a good day. Bye.